PayPal is currently sitting in deep discount. We are almost at the initial public offering price from 2015. Very interesting company, very interesting concepts, very cheap right now. Let's dive into it. So welcome guys to another episode of Liquidity Mapping. Here we have the PayPal chart. We have the volume profile on. I'm gonna turn it off to make everything a little more clear. And we have very high volume traded down here. So this is no surprise. The stock was offered for the first time, for a second time actually publicly here in 2015. It started like most stocks by tanking a little bit, but then ever since then had a huge run into 2021. It did almost 900%. And ever since 2021, we corrected 85, almost 87, 88%. So the stock came quite back a lot. We are almost at this initial offering price. So everybody who's just investing into this thing is pretty much back at break even or in negative. Besides the ones obviously that bought all the way down here, and especially the ones that took profits and reallocating themselves like smart investors do. So PayPal is at a very, very nice level right now. We broke this last low here to the downside. And I shared this chart before on X. You can find this post like it's from December, I guess. I said either we see some strength here and my entry area is gonna be this, or we're gonna lose this. And if there is no strength, and there never was real strength here, we just probably collapse into the lower level because here's not a lot of structure, not a lot of volume was traded, as we've seen in the volume profile. And pull it up again. See this empty area? We just fell through this because there's really pretty much no support of buying and whale activity and institutional activity whatsoever. So we lost this low, so technically we are still in a downtrend. But obviously, if we want to catch the bottom, we need to be brave at some point and just like get in. And I kept my stop loss super wide. It's a 40% stop loss. This is usual for volatile stocks like this. It's still a 15-hour trade if we go back to the all-time high, the range high in this case. Obviously, we're going to take profits earlier. We're not speculating on something like this without taking any profits. But best case, and I see actually a high probability for PayPal to do well from a fundamental perspective. As I said, involvement of a certain elite, once again, Peter Thiel, Elon Musk, like the super rich nowadays have big influence on prices and on companies. And this is definitely a company that's in their interest. It also launched a stablecoin. It also applied for a banking license. So lots of interesting things going on. Digital online payment provider. I mean, we probably all know it and we used it before. So actually, I mean, there are some bad things circling around PayPal, that wallets get frozen and stuff like that. But in the end, it's a very efficient transaction tool and many websites and many people, private people use it. So from a fundamental perspective, I think PayPal has a good chance to at least come back to 0.5 at some point. And we talk about a 350% 9-hour trade idea with a 40% stop loss. I mean, as I said, the stop loss is huge. And best case, I get in even a bit tighter, scale in, because I just started scaling in. So I'm not on my desired risk as of now. But I try to better my average into this like a smart investor would do, or I mean, this is more like a trading style, right? Even though I would consider to invest in PayPal, at the same time, it's also a trade because I don't just buy it because it's cheap and I believe in it. I buy in it because of structure and we have this demand here. And my idea would be invalidated should we lose all those lows. They don't get protected. We start closing below and then I pay a 40% loss on the position. And still, I risk up to 3, maybe 4% on this idea, depending on what majors are saying. And I try to better my average. So maybe my stop loss is the end more like 30%. It's still wide, but it's an investment refined with trading knowledge. This is my main approach with those higher time frame ideas. This makes me able to like define a real risk to reward, to define a stop loss, to not hold a position into minus 50, 60, 70%. For example, if I think as investor I should buy here, and many people probably did because they said, okay, look, PayPal corrected like 80% or something. It's a good company. We spend a lot of time here. PayPal's time has come. Those people are now down 30, 40%. And sure, you can buy more and more and more if this is your strategy. If you're the common investor, probably would handle it like that if he believes in the company. But it gets really tough once we really start crossing this 50% mark. And then also, it's also a question, do you have any capital left to allocate yourself? Did you blow all your powder already? In general, if my main thesis plays out, all this whole area here, so this whole accumulation area, let's say, will end up being a good buy after all, in my view. So if the main thesis is playing, but as said, my strategy is to refine it a little bit with trading knowledge, even though I would consider this more like an investment. So buying PayPal down here is a good idea. We have now a 20% bounce off the lows. Yeah, here. We have a 20% bounce off the lows. My entry is obviously not at the wick low, but I'm still in considerable profits. And this was to be expected because we have this huge gap here, and a retest of these lows here would not surprise me. We are now at the middle of the gap. We reject from here already a little bit. So don't get overly excited about this position because it's a very high time frame play and these things take time. Imagine, for example, the SPX goes in a bear market. It's very unlikely that PayPal will do incredibly well, but it also doesn't mean PayPal needs to go down another 50%. We could also just spend time here accumulating, maybe into late or mid this year. Then we go back for those highs, and then it's already a very, very nice bounce, structurally speaking, into those first resistances. And as said, look at those charts. You will find many of those charts, those crazy pump and dump charts on higher time frames. And usually once we hit an area where it starts being a good idea to be on the buy side again, we spend time here. And PayPal has spent actually a lot of time already. So we're already 1,300 days down here, which is, I would consider average or above average. So you know my strategy. I'm gonna link the video where I explain how I approach stock trading. And ever since we reached this area here, we spent 1,300 days. And this is exceptional, right? So usually after such a long time, companies start to recover, they start to reaccumulate. PayPal actually dropped again. So this could speak for some kind of like spring to the downside if you know about Wyckoff schematics. So like taking all of those people out, making them all fearful that bought here, that invested here. But in the end, we can simply just dip our toe in, scale in, better our average if possible. If not, we can simply wait for a change of character, right? So I expect a rejection from this green line simply because this is a support and resistance flip. We have this big gap. So a bounce was to be expected to fill this gap. And then we probably keep on ranging a little bit longer. And should we go lower from here now that it showed some strength, should we go lower from here again? I will add to this position, even though my average will not be better if I buy for around 40. And if we go lower, I buy even more. So this is my setup idea. Should I not get this pullback, right? So it's always prepare for every possible outcome. It's not like because the gap must react or something. It could also just get gapped again. These things can happen. And so prepare for every scenario. Don't just have one idea and one buy and think like, oh yeah, it sounds smart. It happened before, it must happen again. This is not the case. We can also just go higher. And what will I do then? I'm not on my desired size. I always try to prepare for everything. That's why I'm already in. But at the same time, should we just show strength here and we just keep on going higher, then I will simply add to this position because we start, for example, taking out the supply, start making higher highs and higher lows, break this major higher time from trend line, and then I can add to this position, and then I can tighten my stop loss below this low because then my thesis says, okay, good. If we really see strength from here, we should not undercut this low again. So then I can add to this position. And if I buy here and I bought down here, my average will probably be somewhere here. I can tighten my stop loss a bit, again at around 30% or something. And then the position looks like this in the end. So you see how I prepare for all those eventualities because we can go lower. I can better my average. So with the position looking like it does right now, I can simply better my average should we undercut this low. I have a clear invalidation should it just fail, right? This could also happen. And should it go higher, I have a plan as well. So it doesn't really matter what happens next. I'm somewhat prepared. I'm prepared for downside, I'm prepared for upside, I'm prepared for sideways. And I have a plan for everything. And nothing will really surprise me. In the end, the whole price action will look different than I have imagined in my head, because it's maybe 1 out of 10 times when I really like have the price action already in mind. But in the end, we have three options, right? We go sideways, we go up, or we go down. And that's it. So we don't have to overcomplicate things. We don't have to know how exactly price action really looks. We can just prepare for those three things by structuring our position around this idea that only those three things can happen. And so you see, this is how I approach every single trade, and it's actually a beautiful example of how you can apply this in real life or in a real trade. But in the end, if it's a mid-time frame trade, if it's a short, if it's a long, if it's an investment like this, I apply this trading knowledge on top of every single play I take. Maybe an investment, maybe a trade, maybe a short, maybe long, doesn't matter. It's always the same. So, and if this is playing, if PayPal is actually reaccumulating down here, we buy a nice investment back, we are good exposed for one of a potential very important company in the next years. A good take profit target is here, simply because it front runs $100 and it's supply. The next logical profit target is here because it's supply and it's also around the $100 level. As I said before, psychological key levels matter as well. So you have $100. People expect $100. I sell at $100 because it's a round number. So a front run makes sense. Then after the front run, after rejection, maybe we pump even higher. So the price action could look, for example, like this. Let's say we just go higher from here. We reject from here a little bit. We do this. We reject once again. And then we suddenly do this. And this would still be considered, this whole thing here in the end, this whole range would still be considered accumulation range. So let's say this was just a deviation of the range, and then this happens. This whole thing here would still be considered somewhat accumulation. We could also call this accumulation. So that's probably better to call this the accumulation range because we want to be biased on here. But in the end, what really matters is that we are below the 0.5. We are in deep discount. We have a company that's potentially super important in the future, and we want to expose ourselves down here. The thing I do here is the perfect refined entry, trying to get the best hour possible, trying to apply proper risk management and all that, being prepared for every outcome. But in the end, even if the trade in the end looks somewhat like this, it's still not a bad trade. I mean, a 60% stop loss is probably hard to stomach, but in the end, it's still a 4 or 5 hour trade idea potentially. And this is also where fundamentals come in play, because I would never touch this company if I don't build on very high time frame. I would never touch this company without believing in the business model. I'm not caring too much about earnings and about those things, because a lot of this stuff is psyops anyway. But I look at PayPal and I ask myself, for example, what do I use daily, or what is important? What is important for the next years? What do people always need? What do people always use? And how is, for example, this company position themselves for this kind of narrative, which is like online payments? And now that they launch a stablecoin, that they apply for a banking license, all those things, then there's talking about Stripe acquiring PayPal, Stripe also connected to PYPL. All of those things, like those things matter on a very high time frame. It's like buying Bitcoin. You buy Bitcoin maybe for a technical reason, because you say, okay, it came back a lot, the potential R is good and all that. But in the end, if you buy it for very, very high time frame reasons, you also do that for a fundamental reason. And in this case, it's in PayPal, all the fundamental reasons are there. The chart is looking good. So if someone is not pulling the trigger based on that, it's just like over refinement, over perfection, overthinking in the end. It's a good time to dip your toe into PayPal. And if you wanna do this refined, it was down here around 40. And if you missed out on doing that, you can still wait for confirmation. Sometimes it also makes sense to not try to catch the falling knife, but simply to wait for confirmation. We make a support and resistance flip. We take out this trend line, and then you get in with your stop below the low. There are so many possibilities and there are so many ways to approach this market, but especially if we close, for example, the monthly candle like this is textbook volume spread analysis. If we even close above this, it was just a liquidity grab, and a huge one, a huge liquidity grab, right? So this is also on the table. Try to prepare for everything. Do not try to outsmart the market. Do not overthink things. Also, it may just do not perfectly align right now, but this could also be an acyclical play, right? There are some companies that are doing well while the SPX is doing bad. Usually it's not the tech company who's doing that, but I mean, it could be a first, right? So don't outsmart the market because you have seen some things before. It also could be something you have never seen before. Always keep those things in mind. It's super important to be bias free, to be flexible, and to really understand that there's so many possible outcomes. You can't really grasp all of them. And the more you try to explain and the more you validate your own bias, the worse your performance will be most likely, because you miss out, you talk yourself into trade, out of trades. Just like prepare for everything, scale in, scale out. You don't have to go all in and all out all the time. Layer your positions, like layered, scaling in, layer, take profits, always trying to prepare for everything, always imagine every possible outcome. That's really the key, and it's key in all time frames and all markets. If you have this skill, you will make it as trader if you develop this skill. So guys, so much to PayPal. As said, volatile right now. Don't get euphoric by green candles. Doesn't really matter. You will get your entry. I would not chase those green candles, only if there is a confirmation, a break of structure, a change of character. Then you have a logical reason to enter this position with still invalidation. If it's still like that, we still have weakness, we still try to catch a falling knife. You don't chase the pumps because you don't have any confirmation. This could just be a counter trend bounce, attracting a lot of buyers now. You have also bullish news, all of that. Don't chase. Plan, wait, execute. And if you're interested in getting live updates to those plays, because I'm not going to make a video a week about PayPal, you can join the free Discord. Link is in the description. And because it led to confusion last time, if you join, you get into here. You should read the rules. New members start here. It's actually a little bit self-explaining. And there you will learn that you simply should introduce yourself, and this will give you then the trader role. Because without the trader role, you won't be able to see the TradFi setups. This is just a little filter because we don't want to have everybody there. But if you want to be part of those discussions or have your own opinion or whatever, you can see all those plays here. You can see the whole reasoning. You get updates. You can share your own perspective. It's actually a super nice community. And if you don't know me, I do those videos every week. General market updates, liquidity mapping videos like this one will be released every single week on this channel. So if you want to get access to this, simply make sure you're subscribed and you don't miss any of those videos. So this is PayPal mapped out. Have a great week, guys. Bye.